Hey, what's up, everybody? Happy Sunday. It's Xavier coming back with some charts that I'll be looking at for the coming week. My first pick that I talked about, a little bit about Alibaba. Alibaba basically had some strong movement to the downside on news, of course, that at the time that Donald Trump was looking to remove certain stocks from the New York Stock Exchange. And as a result, many of these stocks, of course, fell down from their highs. And of course, on the news about basically people were like, where's Jack Ma? We haven't seen Jack Ma for the better part of about 3 months. Is he in the gulag somewhere? Is he making big rocks into little rocks somewhere for a speech that he gave a while back? But in any event, as you can see, I talked about Alibaba, about why I bought it. It had been channeling basically between about 225 and 240. I had taken about a $2,000 position, and of course the stock popped tall, and then I of course came all the way back up to a previous resistance point. You should be able to see right here, where basically the stock had been holding below 270. We basically retested that right here on this particular day over here with some pretty good volume, and of course you get a little profit taking, which is perfectly okay. Where I would expect the stock to perhaps fall, it could be right around here where the stock basically gapped down. If you look right here, the stock traded all the way to about in the 250s, and then of course it on big volume it gapped fairly far down, and so we could see the stock come back to about 255, which is probably where it'll meet around the moving average. We could see it come all the way down and retest all the way back down to 240, which is where it previously held both here and of course where the resistance was before, of course, we saw it basically pop back up. So that's basically where I would look to add a little more. I still have about 1,000 or so that I want to add to this particular play. So I'll probably be in BABA with about 3,000, 3,500, and this would basically be my Chinese play. We all hear about China doing very well, America, because a lot of the poor decision making and bad leadership are basically slacking, and of course China is basically on the verge to take over in the next 7 or so years. And I do think Alibaba personally is a good play for me, which is basically why I have bought into the position. And so this is something that I'll basically be watching the whole week. On any sort of a pullbacks between, let's say, 250 and 240, I'll be adding a little bit more to this particular play. The other stock that I've been watching is APXT. I have about 100 shares. For those who don't know, I do trade on Webull. I do utilize Webull primarily for swing trading. I do, of course, have my M1 Finance. This particular portfolio is utilized for dividends. As you can see, that's basically the purpose. This portfolio, we're basically taking this year to about 100K, and we're looking for about $500 of basically monthly income in the form of dividends. I was going to make this video tomorrow or later tonight, but I signed up for a little bit of overtime at the hospital, basically trying to keep in with my New Year's resolutions of doing more work. I basically have financial goals that I set for myself that I spoke of in my last video. I'll leave a link. It's a little bit long, but I do go in depth on a lot of different other plays and what I'll be doing with my particular portfolio, basically to reach my 2021 goals. And so I've got some overtime tonight. Hopefully they won't cancel me, but that's basically what I'm going to be doing. I'm either going to be doing lots and lots of overtime at the hospital to basically get to the financial goals that I'm looking for, or I'll pick up maybe a second job doing some contract work. But in any event, looking at, and of course, doing swing trades. I'm going to be trying to heavily swing trade, taking a little bit more risk than I typically do, as I'm basically trying to kind of max out a little bit more of my risk versus reward. I did have a fairly good 2020, and basically doubling my account, and basically looking to double my account. And of course, I also have my Acorns account, which is just basically like my emergency fund, and I'm basically looking to double that account, which basically means I got to put in a lot of work. So I'll be looking at a lot of charts. I'll be doing a lot of reading when it comes to the market in terms of my long-term portfolio. I've got my retirement account here and in TD that I've got to worry about. So my time limits are typically very small. And of course, I've got YouTube goals that I'm basically trying to push forward for this year. But in talking about APXT, as we can see, basically APXT have been channeling between $13, $15, and $15. We've seen the stock break above 18, but it hasn't done so on volume, which is typically what we would look for a breakout. I took profits the last time I was in this. I had I think I had 135 shares, ended up selling a little bit up here because one, there wasn't a lot of volume and I could see the sellers coming in and there were no real buyers who were looking to keep the stock at 17. And of course, the stock came all the way back down. I ended up rebuying it around 1550, 1570s. I got about 100 shares of the stock and I'm looking for it to retest $17. If of course we do get a day where the stock has some decent volume. As you can see, the average volume is about, as it says here, 2.5 million. So I would look for, you know, a 5 million or 7 million day where the stock just basically gaps up. It would probably retest 17s and hopefully the stock would hold, and then we'd see APXT move a little bit higher. Another play that I'm holding is Fuel Cell. Fuel Cell, I have about 250 of Fuel Cell. I bought in at around 17. Bought it a little bit early. I should have been a little bit more patient and bought it closer. There was 2 opportunities to buy it. As you can see, Fuel Cell basically has support at 14. We've had a couple of days where it's basically hit 14 and basically backed off. And then subsequently, as you can see, like I've said before, as you can see where it finally did break out, as you can see, it broke out on a volume. You can look at the volume on the left. 98 million shares. You can see the average volume here is 76 million. So we, like I've said before, we see the breakout. We see the breakout on volume. You might see a little bit of a move to the upside and then a retest, and then subsequently see the stock move higher. Fuel Cell has, on volume, has basically moved above the $20 mark. It had a high of 21, I believe. Let me see. It had a high of 2094. So we know the stock can go to 20. That's not a problem for the stock. Of course, the stock backed away. It's been channeling back and forth between 15 and 18. And finally, another day where it closed at 18, but the volume, of course, was a little on the light side, a little, almost half of the volume. Even though it didn't have great earnings, the stock didn't collapse as a result of the earnings. It did miss earnings, but it didn't miss earnings that bad. And so I would look for Fuel Cell to basically move to the upside. And of course, again, it would have to be on volume. If the stock were to pull back, of course, I would look to add a little more if we see a bounce at around $14. These are a couple of plays that I'll be looking for in terms of dividend plays. For, again, like I've said, for another stock that I'll be looking at is CRM. CRM is another good play. It looks like we could see some potential to the upside at about 230. You can see where the stock tried to test here, but the volume, of course, was low. You can see the volume on the left where it did test, but it was only 7 million. And of course, what's the average? 8 million. So you'd want to look for the stock pushing with bigger than normal volume. On a 10 volume, 15 volume day, where you see the stock basically push up or gap higher, you might see a retest of 230s. And then of course the stock has potential to trade back up to the 270 area. So this is another stock that I'll be looking at for some potential buying opportunities. We do know that the stock basically held the 210. We saw that right here on multiple days, and as well back here where 210 was the resistance. And then finally the stock broke out. As you can see, the breakout was on volume, and then of course it gapped and went all the way to 280, a little higher, to 285, almost 285. And so that's basically what I'll be looking for, paying attention to these plays, trying to get them, of course, as cheap as possible. That's basically what I'm going to be looking at for the better part of this week. Like I said, it would be BABA. I'd probably add a little bit on the pullbacks into stocks like ExxonMobil, Wells Fargo. But overall, we're looking for a little bit of a pullback in the stock market. The stock market, in terms of looking at the Dow, is holding 30,800. Of course, if it breaks below, we'll see it retest 30,000, and we'll see it retest 30,200 or come all the way back down to 30,000. But again, I would look for a little bit of a volume come in. They could basically pull the rug out, have the stock market dip down. People would probably sell out. There's all this news of Are we going to get a correction in the market? Is the market going to crash? I've heard people talking about 50, 60, 80, 100, 90% corrections. I really don't think that Joe Biden wants the stock market to crash on his watch. And I don't particularly think, especially with the federal government stating that they're basically going to be printing out money the way that they're talking about, that we're going to see the market crash, 50, 60 or more percent. Don't particularly think that's going to happen, at least not within his first year of administration. What we could see is the market pull back, 10 or so percent. We could see the market pull all the way back down here to maybe 2,700. We'd have to wait and see what kind of volume and volatility we're working for. But of course, that's why I have a little bit of money on the side. I do want to add to my cash pile. This week, I'll be adding probably a little bit more. Hopefully I can add maybe 1,000 or 1,500 to this, so I can basically have north of 5,000. In case we do get a pullback, I'll be able to deploy that to buy some cheaper dividend stocks. There are a lot of stocks that are overvalued in terms of risk reward. But many of the dividend plays that I have are typically fairly depressed, and some of the stocks that I'm in, like JetBlue and like for Norwegian, are not necessarily haven't recovered. So of course, you look at mostly like tech stocks are very overvalued. Certain plays, like Apple, of course, Amazon, a lot of the stocks that benefited a while back from the shutdown, like Walmart's, Costco's, etc., are fairly overvalued. But I'm typically not in most of those stocks. Overwhelmingly, a lot of the stocks that I play are typically on the dividend side, because my portfolio is primarily designed on building cash flow. And this year I'm looking to diversify that portfolio by basically adding in some hard real estate, of course, abroad in Colombia. That's basically going to be it. Appreciate you guys watching. If you have any questions, feel free to leave them in the comment section. If you like the video, be sure to hit the like button, and of course share the video. And if this is your first time here, be sure to subscribe so that you don't miss out on future content. I'll check you out next time. Thanks for watching. God bless.